Let's get Thursday, the 12th of November, Frontier Opening Bell started. Thank you so much, Joshua Debisi, Head of Banking Research at Vertiva Capital, Akintunde Sulaiman from Greenwich Merchant Bank, and Agnes Gitao, Managing Partner at GBS Africa. Thank you very much, both three of you, for coming on the show. We appreciate it.
Thank you.
Good morning, everyone. Thank you so much. Let's look into the markets as we saw the third trading day, a very active one across a number of frontier equities markets. Nigerian market nearly 2%, crossing into 33,000 territory. The Ivorian markets were softened by 0.1%. The Egyptian market about 0.75%. The Monetary Policy Committee of the Central Bank in Egypt is holding a very crucial meeting today. The outlook is likely another interest rate cut, very marginal, however, continue to stimulate the Egyptian economy. That decision is still ahead. We'll see how the MPC decides later today. Kenya got a much bigger market reading yesterday, 2.26% bigger than Nigeria, and South Africa softens 0.1% on the counter. That's the all-share index. For East African markets, let's just look at the news, by the way. The CMA, which is the SEC, is partnering 23 global regulators to test innovation across borders. The CMA has been moving fast and furious in recent times, licensing new operators, looking for new ways to deepen the Kenyan market, including Islamic finance, sukuk, and every other product that Kenya is looking to bring on board. Reporting within the same period is KCB, which is Kenya Commercial Bank Group. Net profit down 43% to 10.9 billion shillings. And Kenya has been rated by Africa Private Equity Funds and Venture Capital Africa for being a leading hub when it comes to startups, because Kenya has just released a new bill or law that will help startups in the East African economy. I'm sure this is music to the ears of Agnes. And UK-CDC Group, which is the development finance arm of the UK government, is looking at Kigali's new international financial center for offshore investments. That is one game changer there for this East African country. Agnes, very quickly, this Kenya being a leading hub for startups, I think it looks like a deliberate attempt here by the Kenyan government to get things up and running, even though we're expecting President Kenyatta to speak later this evening to the parliament about the coronavirus and the second wave.
Thank you, Bosun. That's great news for Kenya and speaks to the commitment by the current administration towards promoting startups and promoting SMEs, because government understands they cannot provide employment. So it's up to the private sector, obviously making sure the regulatory framework work. There are incentives to enable startups to operate in the region, and certainly this is the way forward for every African nation, whether they are the leading country, out of what, and against who. So I think that is a conversation we can have as we should pat ourselves in the back, certainly, but I am aware of commitment by the administration and the regulators to promote entrepreneurs, and certainly this being voted the leading hub for innovators, I think is setup is certainly good, and hopefully it encourages them to continue doing what they're doing. On the Rwanda Kigali Financial Center and CDC coming on board, we've had this conversation, Boston. We are aware that Nigeria looked to set up their financial hub. So did Kenya with the Nairobi Financial Center. But Rwanda is certainly walking the talk, bringing in all the partners and key players. And I think this is one to watch out for. Really pleased for what they're doing, and I think it's a commitment. They're putting their money where their mouth is, and certainly the confidence of international players like the UK CDC, and we've seen Mauritian companies, we've seen companies from the Gulf really getting into support the Kigali financial sector. Is great, and I think it's great for East Africa and the Sub-Saharan Africa. The other story from the East African headlines is the CMA partnering with international regulators. Again, this speaks to the innovation and promoting startups. CMA is a member, I think in 2019, joined the Global Financial Innovation Network, really trying to get best practice to see how they can promote innovation at the same time regulate. But again, speaks to the fact that Kenya wants to be a hub seen to protect startups. But I think CMA comes in because as you see the growth of fintech and digital technology, you also to some extent will need some regulation, and CMA partnering with these global regulators goes towards that.
I agree with you, Agnes. I'm going to ask Joshua and Akintunde to for their brief comments on this East African story very quickly. First, Akintunde, let me ask you about the need for us to have what you call to start up hub. When you look at the agitations of the youth recently with the protests and all of that, and the unemployment massively in Nigeria, 27% or so, official figures, unofficial figures, everyone knows is well above that. It's just like the exchange rate at about 386 or 360 on the streets. You're talking about 450, 470, close to 500. So we know the numbers are much more. So I think we need to have a bill such as this that Kenya has put together to also something to drive what the government has tried in recent times to do by doing a few hubs in Lagos, Abuja, Kano, wherever.
Yes, I agree with you, Barsha. But the thing is, I don't see the will, yeah, because you agree with me. The omnibus bill that has been in with the executive for over 3 years now, I think since 2017, to accelerate the ease of doing business and foster business environment is still pending and lingering until today. We are still talking about, oh, this is the impact it will make, this is when it's going to come in. We have not seen it come out, and the same thing will go for this because beyond the intention of policies, I think it is high time we started evaluating policies based on their outcome and their effects rather than the intention at which the legislators or the authorities used in formulating those policies. We need to be more drastic in Nigeria. We need to be more drastic in Africa. Definitely, it's going to be helpful, but the environment itself, the business environment might not foster that to work because the government needs to extend ease of doing business beyond what is currently doing. If you put in the old laws and the old policies out there, will they function? I doubt it because there are fundamental issues that need to be addressed, which have not yet been addressed. And until we see those fundamental issues being addressed by the government, those policies will just have good intentions, but the effect and the impact will not be felt.
I agree with you. Joshua, what about a financial hub? Do you think we should still pursue that? Do you think it's something looking at, an international financial center?
Well, I think before we can even get to that, first of all, we need to stabilize our currency because our market right now is, is not being touched with a long stick because of the fact that investors are not assured of being able to move their funds out at a moment's notice. That's the truth. So before you can get to that point, our financial market, I think, is quite strong. Up until the CBN started cutting rates aggressively earlier this year, we had some fairly solid returns in the fixed income markets, and investors up until sometime last year were pretty much assured they could still get their money out when they needed to. But at this point, the queue lining up to the CBN has not gone down too much, and the truth is that they're having to find creative ways to exit the market. You can't have investors, you can't coax investors to come to your country when they don't have any assured, exit strategy. So before we can get to anything, we need to stabilize our currency, either float it or further devalue. But the truth is, at this point, I don't think the government is, or the CBN is, very willing to even though international players will tell you that the currency should be well in the 400s, if not 500. So if that is not addressed first, I don't think any international player, any serious international player with serious funds, the kind of funds that we need to flow into the country, will be willing to come.
You have a very valid point. But again, let's check in with the Nigerian market. Good morning, Uche Naminis, for joining us on the program this morning. Let's just check in through when you look at the AfCFTA news yesterday, the ratification, which the Nigerian government has approved ahead of December 5th, 2020 deadline. Ghana's October inflation slows to 10.1%, food inflation 12.6%. That's continued to move up. Budget deficit for Senegal doubles to 1.195 CFA franc, and WAEMU's financial inclusion rate up to 60%, topping the list. That's very huge if you consider the number of countries within the West African Monetary Union, which basically is the French-speaking West Africa, by the way. And Nigeria's governments, the capital expenditure spending could be as much as $30 billion according to Africa Economic Commission. That's in the news, by the way. But let's just quickly get Uche to weigh in very quickly on the. Good morning, Uche. Let me welcome you to the show.
Good morning, Wilson. Thank you for having me.
Thank you. Give us a spice of the global a trend into where we are this morning with the two transitions in the United States. It looks like Trump has his own transition to continue in power. Joe Biden is planning his own transition. The news is that he has appointed a gentleman as his chief of staff as a way of getting started. The oil market continued to move on, but it looks like the risks around the COVID-19 and all that is upstaging the initial euphoria that we have a virus, vaccine on our hands, and that may come anytime soon.
Right. So it has actually been more of the vaccine and the assumption that the Biden presidency is not all that bad. So we can see optimism in risk assets trading accordingly. The vaccine actually, the data has shown that it has over roughly 90% efficacy, and they're ready to ship close to about 200 million doses in the first quarter of next year. In that regard, I think the market is sort of latching on that positivity really. But what the market has not really priced or looked to price or have seen as a risk is the fact that Donald Trump might continue to stay into power, and that is something that the market has really not priced in. So the assumption is that there's just going to be dilly-dally. At the end of the day, he would concede, and there will be a smooth transition. So I think now we're sort of seeing that risk just sort of being transferred into the inauguration, which is January 20th. And as regards to oil pricing, it has actually been trading in the, should I say, depressed range-bound structure, technically speaking, for a while now. However, on the release of this vaccine info, we saw oil prices trade as much as 5%, and not of a surprise as a result of that positivity. As I said, really, it's more of the reality that what market participant is pricing it, and they are always looking to control risk at the moment, and the market participants are not just paying attention to the fact that we will get any form of significant lockdown like what we saw in Q1, Q2 of the part of this year. Every concept, every assumption is that those days are behind us. What the worst case scenario is going to be partial or some restriction here and there, and that in itself is giving the idea that business and economic activity will continue to see an upward also.
Okay. Thank you, Uche. Quite a whole lot there for the dynamics, how the market will continue to move on with the reality that even with any vaccine, it's not likely coming through until second quarter next year, but perhaps we'll be able to fast track things a little bit because of the winter period in Europe, and it could get to some very critical set of people, very importantly, those who are the health workers, that they need it first because they will be in charge of taking care of the others, and then to the most vulnerable, the elderly and the others before it gets to others as well. We hope some of this will translate into good news and better reopening of the economy for everyone, with the UK GDP numbers coming through this morning and the lockdown, the impact on the UK economy being seriously considered as a source of concern. But let's talk a bit more about the Nigerian space, where the government yesterday approved the ratification of the AfCFTA. Akitside, what's your take on this ratification? Do you think we are now coasting home?
Oh yeah, it's a solid development. It's good to see African nations come together in issues of trade and investment, rather than the usual politics and security we've always known those conversations to be based on. This is solid because it opens continental space for traders, investment, and businesses. On the downside for Nigeria, the constrained manufacturing sector and infrastructure deficiencies might not be all that good for us. It will increase competition in the market. It will lead to some solid inflows. But you agree with me that a lot of our goods here are imported. We are an import dependent country, so it doesn't really sway us on to the upside for to a large extent. But I think it's good for the continent, and the competition can somewhat spur up production and manufacturing. Actually, the manufacturing sector, Nigeria needs to find a way to enhance that value chain such that it is integrated with the agricultural sector. So those produce we get from agricultural sector are not always exported, but they are backward integrated into manufacturing. That way, we can enhance the manufacturing sector. The manufacturing sector in Nigeria contributes about roughly 8% or 9% to GDP. That's mega, that's quite small compared to 21% or thereabout, or 24% agricultural sector contributes. So we need to bridge that gap. We need to ensure that we can find a way to intertwine these two sectors, the agric and the manufacturing, to enhance production in the country, and that would foster our continental trade across or to just enhance this agreement, this FACTA agreement, and help the Nigerian economy.
Interesting. When you look at the inability of Nigeria to link its rich agriculture space with industries, it's just I'm sure, Joshua, you're thinking about that as well, that we can't just see the linkage or build a bridge between agriculture and industries.
Well, you used a very important word there, building. We used to actually building and bridges, because it's all about infrastructure. The truth is, our poor infrastructure is what is holding back our manufacturing, because you can't go and set up a factory when there is no road, there's no rail, there's no linkage, direct linkage to either the ports, or the fact that there is that lack of transportation. First of all, you can't transport from either the farms, to the factories if you built a factory, or from the factory to the ports. So any kind of investment will have to look at the viability of setting up a factory. Even if you have to go and set up right next to the farm, you have only solved one problem, but the second problem of how to get it out to the consumer, how to sell it to the exporter, you have not solved it. Not to talk of the lack of stable, constant electricity. Those are all the infrastructural issues that are holding back manufacturing, because anybody who is setting up a manufacturing plant of any type, whether it's just to make even gari or yam flour or things like that, would have to set up their own diesel power generators or power plants or solar. All these things add so many extra costs to whatever investment that you're going to have, that it doesn't make the business viable on any level. And the viability of a business is one of the most important things to any investor, local or international, because there are a lot of VCs, private equity firms, or just FPIs that would be happy to come into this country if we had all of those infrastructures in place, and then help us to get them up and running. And it would create many jobs, and it would generate a lot of revenue, a lot of foreign revenue, if we get everything up to standard. Now, these are the things that I would expect the government to be working tirelessly to fix. Sure, there's some progress with the railways and things, but most of them I've seen have been very much focused on passenger travel. Hopefully, there will be some locomotives that will be purely for freights that would really help some issues. But the truth is, you still need to have linkages to those hubs, to those stations, because it's not all just about passenger movement. The truth is, we need to be able to move products as quickly as possible down to the ports and get them out for exports.
You make a very valid point, Joshua, because if you have a hub of a railway station somewhere in the middle of somewhere, how do I get the farm produce through bad roads to the train station? Exactly. So you give me a train station, but how do I get there in the first place? The farms are going to be hundreds, whatever, dozens of kilometers away. So how do I move these perishable goods quickly through a processing or a warehousing before it gets to the train station? So building rails is not just enough, but how do you get the roads there? It's a whole lot of different conversation. And the entire thousands of network of roads in Nigeria, to the farms, because it's a rich agricultural country, so we have a whole lot to do in that corridor. And I agree with you, gentlemen, you raised some very valid points of how to link agriculture with industrialization. The gap in the middle is very huge. And until we fix it, we're just still beating about the bush to a very large extent. Let's talk about South Africa. President Ramaphosa was on the news yesterday with the state of the nation, asking everybody to adhere to virus protocols to avoid another lockdown. Well, in a manner of appealing to South Africans to please celebrate the Christmas and New Year holiday with very extra caution, to have those celebrations outside in open space rather than confined places. People are told to be responsible with alcohol consumption and all of that, so that they don't spread the virus and have a resurgence that the economy cannot afford a second lockdown. And I'm sure that's the similar message that President Uhuru Kenyatta will give to Kenyans this evening when he speaks to the parliament. We understand he's speaking tonight. Tsogo Sun Hotels in South Africa warns that its revenue could go down as much as 1.8 billion rands because of the pandemic. Well, hotels and tourism, as well as the airlines and retailers in the firing line for the pandemic. Corn exports in South Africa up about 2,800 metric tons in 2020-2021, according to the data released on Tuesday by the U.S. Department of Agriculture. Lucara Diamonds says it recovered 998 carat diamond from Karowe mine in Botswana. And the miner says his revenue up $41.3 million US, but $5.4 million net loss in 2020. A very quick one with Agnes, when you talk about the virus, the lockdown, with what we're seeing in Europe, in the UK, how careful do you think Africa should be right now not to think that we've been able to dodge the bullet?
Thank you, Boston. I think Africa has been, I would say, lucky in the way the COVID-19 has dealt with us. But you're absolutely right. We need to be very careful. We're seeing cases rising across Europe, North America, South Africa, obviously, and Egypt leading in Africa. As of 7 days ago, it was about 700 cases daily. And Kenya, we are aware cases are rising in Kenya. So we need now to move away from Africa is lucky and try and have decisive action to ensure that public health and our people are protected. So certainly government needs to be cautious, but also it's also individual responsibility. You've got to be careful what you do, who you interact with, and ensuring you adhere to all the public health guidelines in regards to protecting yourself. So certainly a good call by President Ramaphosa, because the impact, if the case continue rising, the impact on economy and lives of people will be dire.
So if we take this up right now and we check in with what we should be doing here on the continent, Joshua, what's your Joshua, let me ask you first, your take on this. Do you think it is time for us to also raise this awareness? It looks like the regular daily briefing by the CDC, Ministry of Health, has since paled into its significance. I'm not sure anybody's watching that on TV. I can't even remember the last time they held any briefing, COVID-19 briefing You go to certain places right now, some offices, the sanitizers are gone. The face mask also looks, folks are just hanging it below their neck if they have it at all.
I think, first of all, the most important thing is to keep this thing in the front of people's minds. I still endeavor every time I go out to continue to, keep my mask on and to always sanitize or wash my hands. But I find that the attitude has gotten a bit lax, and it's not anybody's fault except for the people who are supposed to continue to remind us and to enforce these rules and regulations. Until there is a widespread and widely available vaccine, everybody needs to continue to remain safe and continue to adhere to the safety guidelines. Now, like you said, the CDC has sort of faded into the background. I don't know if they're still having the normal briefings,
Daily
but
briefing,
even the daily release of the number of cases and things like that has sort of died down, and it's mostly, I think, a fault of the 24-hour news cycle, because there's always something new, so people have just become distracted. I think the most important thing is that we sort of don't let it just fade into the background. The government, the private sector, everybody needs to just reset, go back to square one, and continue to use these guidelines that have kept cases so low for so long. And I think everything would, flow from there.
Uche, just a word here based on what Joshua was saying. Uchenna, in terms of how the global market will continue moving forward, whether we like it or not, the festive seasons are here. And of course, investors will begin to want to start tidying up their books one way or the other. So where's the currency play? As the fears of the second lockdown, the virus wave in Europe and all that is now beginning to emerge as a reality that they will have to deal with moving into 2021.
Yeah, I think with balancing into the end of the year is going to be quite significant, really. And as you rightly mentioned, it is more of what the cases of corona is looking like and the effect on business and economic activities. Also, is there any geopolitical risk? Are we going to be having that significant drag whereby there is a presidency tussle between Joe Biden and Donald Trump, and that has an effect on the US dollar? And those factors are sort of the variables that I think market participants will be focusing on, and how having to inform them on what currency play. I think we still see a significant inflow into precious metal, just to keep things cautious. And we also saw cryptocurrencies, another way where market participants are trying to say, well, I'm not exactly sure about fiat currency and monetary policy system from the global central bank system and policies, really. So I'd rather just put some of my portfolio and reallocate to a digital currency that's sort of decentralized. So I think it's going to be quite interesting into the end of the year what we'll see with portfolio rebalancing. But I believe the safe haven currencies like the Japanese yen, the Swiss franc, to some extent, given the disparity in terms of lockdown and handle of coronavirus cases between euro and the US dollar, has also put the euro into that sort of makeshift safe haven currency at the moment. So I'm expecting all of these currencies to sort of do well into the year, into early next year. However, highlighting and market participants looking around these possible risks as how to really react aggressively if need be, basically also.
Oh, okay. Thank you so much for giving us that global market play with the FX for as we wrap up the year. But just give you a few seconds. Let's go to the North African markets as we try to add up today. We'll talk about Egypt monetary policy meeting today. Libya's oil production is ramping up. OPEC will have to deal with this. Oil prices in very good shape as we speak right now. So let me just ask Akisudu Suleiman. This is a good time for Nigeria to be happy, isn't it? Nearly $45 a barrel.
Yes, I mean, our benchmark currently is about $20 per barrel and $25 per barrel. So it's cool. But going down into next year, would that be the play? You see, Libya is hastening production, and that will just intensify the glut we'll be seeing in the market going into 2021, and that has put a bleak outlook on oil. And you see a lot of investment that is meant to go into the oil market. For example, the AEC has said they will cut down about 30 billion $30 billion worth of investment and about 80 billion worth of investment going into 2025. So that already puts a bleak outlook into oil. For Nigeria currently, yeah, it's fine, but going into 2021, I don't think it will be all rosy with the second wave coming out of our face, and with the intensified glut expected in the energy market. I think we should be cautious on our optimism going into 2021.
Perhaps, Joshua, you think that when the 2021 budget is being considered at the National Assembly, perhaps the $40, $41 benchmark proposed by the executive branch should be trimmed down a little bit. 2 days ago, Goldman Sachs reviewed its Brent crude forecast for 2021 to 47 from 51. Would that be a safe assumption? Would that be good for us to do?
Yes, I think it would be very good for us to trim it down, because the lower our benchmark, the more realistic the budget will be, and anything above that for the oil price, for crude prices, would obviously be a bonus. The truth is, I think the level of inflation we've seen in the budget year on year during the past five to 6 years has been quite astounding, and unfortunately it has just because of unrealistic benchmarks, we have seen our budget deficits grow exponentially, really. So I think having a more realistic approach, trimming down the benchmark, let's say to the high 30s, 37, 38, would be a much more realistic move, and would actually serve us better if the oil market does actually improve significantly better than that.
Thank you. We're wrapping up the show right now. Agnes, let me give you the last 30 seconds or 1 minute quickly. What would you like to hear differently from President Uhuru Kenyatta when he speaks tonight in his State of the Nation address?
Probably absolutely nothing. I just want him to get on with his job, doing what he's meant to do, providing jobs for the masses and ensuring that there is a structure in place to protect people from COVID-19.
Okay, thank you so much. We appreciate that. Thank you so much, Agnes Chital from GBS, Joshua Debisi from Vectiva Capital Management, Uchenna Minis, thank you so much, and Akitude Suleiman, thank you so much as well. We appreciate all of you for being on the show today. Let's continue to stay safe, and we'll see you tomorrow. Friday, we'll have a lot to talk about the Nigerian interest rate, inflation, the yield environment tomorrow on the show. Thank you. Have a good day, everyone. Bye for now.